Hello everyone, my name is Yamili Fernandez and today we're going to be going over the Excellence title, new system that we're going to be providing to our agents. I'm going to go ahead and mute everyone so that way no one can speak when I'm doing the meeting. Give me just 1 second. Let me go ahead and mute everyone. All right, perfect. Give me just 1 second, guys. We're going to give everyone an opportunity to log into the session. We're going to give a few minutes here and then we're going to get started with the presentation. There's a few people logging in right now. I'm going to go ahead and let you in. Please let me know if you can see my screen, and if you can hear me, you can open up the little chat window. Zoom has a black bar. If you look at that bar and hover over it, you can probably click on the three dots that says more. And if you click on more, you'll be able to open up the chat button where you can ask questions while I do the session. Please open up the chat button and let me go ahead and see. All right, perfect. Someone can hear me. All right, awesome. Make sure that everyone else can see the screen, and if they can hear me, please click yes on the chat. All right, perfect. We got a few yeses there. Okay. Give me just 1 second. We have a yes. Okay, awesome. All right, perfect, guys. So let's go ahead and get started. So we're here at Xcellence Title's website, excellencetitle.com. And when you're on their website, you're going to see a login button on the right-hand side. You can click on there, and that's where you'll be able to log into our new system called excellencetitle.titlecapture.com. As soon as you're there, you're going to be logged into your account. But let me log out real quick so I can show you how to log in. So you'll see the login page right here. You'll be able to enter in your email address and your password. Now, if you don't have an account yet, you're able to click right here. Click here to sign up for a free account. And as soon as you click there, you'll be able to put your email address. You can go ahead and add a password. You'll add your first name, last name, your company name, which is Xcellence Realty, of course. And then you're going to add yourself as a real estate agent. And as soon as you click sign in, you're going to have access to the account. And then you'll be able to log in. And then once you're logged into the session, you're going to come into the dashboard here where there's many items that you can do with this software. So we're going to be going over all the items today. So here we have what's called a seller net sheet. We also have a buyer estimate. And if you click on the arrow down, you'll be able to see title quote. So if you wanted to do a title quote for both buyer and seller just on the fees only, you can go ahead and click that area. We also have the option to do a monthly affordability. We have rent versus buy. Today we're going to start off first in seller net sheet, but we're going to go through all the items. That way you can learn how to use the entire system, okay? So today we're going to start off in the seller net sheet. Let's go ahead and click there. And we're going to enter in the property address that we're working with. Now, once we enter in the property address, a drop menu would appear. You'll be able to select that. And then you can enter in your sale price. We'll put here that it's $300,000. And the closing date is on February the 26th. Additional transaction details. Here you'll be able to pay who pays for the title insurance. Is it going to be the buyer? Is it going to be the seller? Are they going to split it equally 50-50? Here you can decide which option to pick. Since we're doing a seller net sheet, guys, I would probably suggest that you put seller only. That way the seller can see the fee. Just in case if, let's say, you get an offer on the table and maybe they're asking the seller to pay for the title insurance, then the seller at least will have an idea of how much that cost. So go ahead and put seller only. Under endorsements, you don't have to worry about this part. It's already selected, so just leave that alone. Under payoff, you can go ahead and add how much does the seller have in a loan. So if they have a loan that they owe for $200,000, you'll want to enter that there. And if they also have a second loan, guys, make sure to ask the seller if they have a second loan. And if they do, add the amount there. Now, when you scroll down here under real estate broker commission, you'll want to enter in how much commission you guys are charging. So if you're charging 3.0 on the list side and 3.0 on the buy side, you'll go ahead and add that there. And then you also want to add your transaction fee that Xcellence Realty charges, which is $300 per transaction. And then you'll scroll down and then you can add the association information. So if there is an association, you can add the monthly payment. So we'll say it's $100. And did the seller pay the current monthly dues? You'll put no. But if they did, you can go ahead and put yes, but typically they won't pay it. It'll probably get paid on the day of closing. So just leave it alone as no. And then here you'll put if there's a resale certification or a transfer fee that the association charges. So you'll want to find that out with the community, see if they have any fees. And if they do, you can go ahead and add that there. Now under property tax proration, you're going to come over here and add the property taxes. So we'll say it's $4,000 in this example. And then here under other seller expense and credits, here you want to add if there's any expenses or credits that's going to be given to the seller. If there is, you can add additional line items. If there's not, then you can just leave that part alone. Now, as soon as you click calculate, guys, we're going to generate an estimate here for the seller net sheet of how much money the seller is going to be receiving on the day of closing. Here it's going to say the sales price, and it's going to have the closing fee. So for South Florida, the closing fee in Xcellence title is $695. But once you pass West Palm Beach, the closing fee is $495 from anywhere from West Palm Beach all the way to the end of Florida. Xcellence title settlement fee is $495 on the north side, okay? Now, owner title insurance is going to go ahead and calculate the policy. So if the seller had to pay that because the buyer selected that the seller is going to choose a title company and pay for the owner title policy, then you'll go ahead and show them that price. Now, if the buyer is going to pick their own title company and they're going to pay for their own title policy, then you don't have to worry about this. But you still want to add it on the estimate just in case, because you're not sure what the buyer is going to pick when they submit their offer. So you always want to make sure at least the seller can see the fee. Now here's going to give you the recording and transfer doc stamp fee. That's what the county charges to transfer that. And then it's going to have the mortgage payoffs of $200,000, $5,000 on the second loan. It's going to have a breakdown of the real estate commission for both sides and the transaction fee for Xcellence Realty. And if we continue to scroll down here, it's also going to do a proration of taxes. So whatever your closing date is, the system is going to calculate the proration that the seller is going to be providing to the buyer on the day of closing, okay? Now, also, it's going to prorate the homeowner's insurance if there's any. The homeowner association due if there's any. So that will go ahead and take that into consideration. So if your closing date is on the 3rd and maybe the seller has to give them a credit for those 3 days, and the system will take that to account and give that credit to the buyer on the day of closing. So let's continue to scroll down here. We have the estimate net proceeds for the seller. So that's how much the seller is going to be getting on the day of closing. Now, if you scroll up, guys, you have the ability to save your quote. Any quotes that you save will be saved right here in this area where you can find them later on. If you wanted to email the quote, or if you want to make a flyer from the quote, you're able to do so as well. Now, if you print the quote, it's going to brand the seller net sheet, and it will look like this. You'll have a seller net sheet, and it'll be branded with your contact information, with your photo, your name, your email, your phone number, and it'll also be branded with Xcellence Titles information. So this is a nice PDF that you guys can print and take with you on the day of your listing presentation, so you can present it to the seller, so that way at least they know how much they're going to be receiving on the day of closing, so you don't have to run these fees manually. Okay, and that's pretty much it. That's how you complete a seller net sheet. If you have any questions on the seller net sheet, please type them in. I'll be more than happy to walk everyone over their questions. Right now at the present time, I don't see any questions. Feel free to type them in if you have any. If not, we're going to be going straight into a buyer estimate. So let's go ahead and click on buyer estimate. And we're going to open up the buyer estimate section. Now, when you're doing a buyer estimate, you'll want to enter in the address of the property that you think your customer is going to be buying. That way you can provide them with an estimate before you submit the offer. Now here you enter in the property address, and then you'll put the transaction type. So if it's a purchase with financing, or if it's going to be cash. So in this example, we're going to do purchase with financing. And then here you have a loan type. So you can enter in if it's a conventional, a VA, an FHA, and the system will calculate that accordingly, depending on the type of loan that it is. Today, we're going to do the example of a conventional. We're going to say that the property is selling for $300,000, and the down payment by default is going to put 20%, guys, but make sure to change this to your 5% conventional, or 3%, whatever the buyer's qualified for. So we'll go ahead in this example, we're going to do 5%. The loan amount is going to be $285,000. And then the interest rate by default is going to put 4.25. It's going to put 4.25 there, but you obviously want to put the interest rate that they're going to be getting. So let's say, for example, in this example, we're going to do 3%. And then now it's going to ask us for the closing date and also the loan term. So if they're going to be doing 30 years, go ahead and leave it at 30. If they're going to be doing 15, you want to make sure to select 15 if that's the case. Now, additional transaction details, guys. Who's going to pay for title insurance? Is it going to be the buyer? Is it going to be the seller? Are the parties going to split it equally? In this example, I'm going to put the buyer. And the reason why is because I want the buyer to see how much it's going to cost for the title insurance. That way they have an idea. Even though you might send an offer out and you might ask the seller to pay for it, you definitely want to make sure that when you generate these estimates that you put buyer only, since we are doing a buyer estimate. That way at least they can see how much it'll cost just in case if the seller doesn't want to pay for it, okay? All right, so let's continue. Here we have endorsements. You can leave that alone. That's selected there already. Homeowners insurance, guys, we'll say in this example, the homeowners insurance is $3,000, but keep in mind, this is an estimate and you have to let your buyer know that. What's going to determine the price of the homeowners is, of course, you know, your 4-point inspection, your wind mitigation reports that you're going to provide to the insurance company so they can give you an accurate quote. But in this example, we're going to put $3,000. Now the property taxes is $4,000 in this example. And then here we're going to go ahead and put the fees being charged to the buyer. So if you're charging your buyer the $300 transaction fee that Xcellence Realty charges, don't forget to add it in the estimate. Over here under HOA dues, if the property has an association, let's go ahead and add the amount there. And here it says, did the seller pay the current dues? Even though they say that they paid for it, I mean, always put no. That way it can take it into consideration just in case, because you never know, your closing might happen the next month and maybe next month they didn't pay the association dues. So I'll leave that as no. Now impounds, guys, I want to go over this section because a lot of agents might get confused in this section. Impounds in reality means prepaids, okay? It just so happens to be the software that we use is a software that's used not only nationwide, but they use it in different places and they call it impounds. But it's really actually prepaids. And today I'm going to be showing you how you can calculate the prepaids on the homeowner's insurance and also the county taxes, because when the buyer gets a loan from the bank, they're going to take in consideration that escrows have to be put together and they're going to want to collect a few months in advance for the homeowner's insurance and for the property taxes. So I'm going to share real quick a little chart here that I put together for you guys. Give me 1 second. That's not the chart. All right. So here I have a chart that I downloaded on the internet. And I think that this chart is really good because you can kind of have all the months laid out here mentally so you can count them. And that way you can figure out how many months are going to be collected for prepaids. Okay. So we have prepaids on property taxes. So in this example that I put together, we had a 2020 taxes were $3,600. Okay. The closing date in this example was July 15 of 2020. The first mortgage payment is on September 1st because typically when you close the loan on July 15, the bank is probably going to give you anywhere between 30 to 45 days where you're going to have no monthly payment. And then the buyer's first monthly payment is going to be September 1st. Now it says here, the September 1st and October 1st payments will be paid before the taxes are due on November 1st. So if you're closing your deal July 15, okay, so we're right here in the middle of the month. We're in July 15. And your buyer is not going to have a payment for August and September. Well, actually, I'm sorry. Your buyer is not going to have a payment for July 15 to July 31st. So they don't have a payment there, which is about 16 days there. And then you have August, which is 30 days. So those extra days right there, they're not going to have any payments. So their first payment is going to be September 1st. So the September 1st and October 1st payments will be paid before the taxes are due on November the 1st. So the bank is going to collect these two for sure because they need to get ready for paying the taxes on November the 1st. So let's go over this real quick. So let's say the taxes are $3,600. Let's go ahead and get a calculator so I can show you how to calculate this. Give me 1 second. All right, so we have a calculator right here. The taxes are $3,600. You're going to divide them by 12. So it's roughly $300 a month that we need to collect before the taxes are due, okay? Now, you brought the property in July 15, so the seller gave you a credit of $300 per month. So this is 300. This is 2, 3, 4, 5, 6. And then pretty much they're giving you 6.5 of credits that you're going to receive on the day of closing. So let's do the math. So you have 300 times 6 months, that's 1,800. And then you have your 15 days that you have to do as well. So let's get the 3,600, which is the yearly taxes, divided by 365 days. Your proration is $9.86. And then obviously the rest of the numbers. So we're going to leave those numbers there and we're going to times it by the amount of days that are here. So let's do the math. Give me 1 second, guys. We're going to get a date calculator because I want to show you how to do this from scratch, because you have to understand how this works in order to understand how many months are you going to put in the prepaids, okay? So give me 1 second. We're going to get a date calculator here. And once we get the date calculator, this makes it very easy. So if you're January 1st, 2020, and remember this whole example was based off 2020, okay? And your closing date was, give me 1 second. By the way, guys, when you go to the date and time calculator, you got to switch over because this is actually doing it by date and then it's asking you to enter the days there. That's not what we want. We want to switch over to date calculator. That's the one that we want. So here we're going to put January 1st, 2020. And we're going to put the closing date, which was July 15, 2020. So when you click calculate, that's going to give you 196 days where the seller has to prorate the taxes and give you a credit on the day of closing. So if we have 196, let's go back to our calculator. And then this is the amount of the proration per day because we got the 3,600 divided by 365. And now we're going to grab that amount and we're going to times it by 196. So our proration is going to be $1,933.15 that the seller is going to be giving us, okay? Now, let's go back to our chart. When we go back to the chart, so the seller gave us a credit for all of these months, okay? And we stopped right here. Now, the taxes are due November the 1st, but the buyer is not going to have a payment until September the 1st. So when the buyer pays September 1st payment, he's going to be paying $300. He's going to pay another $300 here. And then the taxes are going to be due on the 1st. So let's go ahead and add that amount. So we're going to add the $300 that he's going to be paying on September, October, and then he's going to have $2,533.15 to pay towards taxes. But then again, the taxes are $3,600, so he's short. So let's go ahead and minus that out. He's short $1,066.85. So let's go ahead and grab this amount. And we're going to go ahead and divide it by the $300 that he typically pays for taxes. And we're short 3.55. So with this said, the lender is probably just going to want to collect 4 months. 4 months in taxes is what they're going to want to collect. Let's go back into our Xcellence title system. All right. And we're going to go ahead and enter 4 months right here. Right there is where we're going to enter it, 4 months. So that's how you figure out the prepaids, guys, which in this system is called impounds. But pretty much it's the same meaning. You have to calculate this, because if you don't calculate it, the estimate is going to be short. So when you give the buyer estimate, it's not going to include prepaids. Even though your mortgage broker is going to take care of all of this for you, and the ultimate goal is always to have the buyer get their pre-qualification letter, speak to Xcellence Mortgage, make sure you get them pre-qualified for a loan, make sure you know that they provide you the estimate so you don't have to figure all this math out, just like how we did right now. That will be the ultimate goal. But sometimes you might have a buyer that doesn't want to run their credit. They don't want to get pre-qualified. They just want to see houses, and you don't want to lose the opportunity because the buyer's being very persistent. They want to see a few houses, and you don't want to lose the customer. But at the same time, you want to know if the buyer has enough money to actually be able to purchase the property. Do they have their 5% down payment? Do they have their closing costs in the bank ready to go? All of these items are very important, guys, that you know all of this information. And the only way to know this information is asking the buyer, hey, do you have 5% to close? Do you have your closing costs? And then the buyer is going to tell you, well, how much are the closing costs? And then you're going to be like, oh, I need to run the numbers from scratch. I'll get back to you. And then this is how you're going to do it. Okay. Pretty much you're going to use the buyer estimate here. You're going to enter in all the information here. The system is very easy, guys. The only part that's complicated is the impounds. The impounds, you need to run the numbers manually because you need to tell the system how many months are you going to be collecting in prepaids. If you leave this blank, then your estimate's going to be short. So just keep that in mind. Now you're going to do the same for the insurance, guys. You're going to do the same for the insurance. So let's go ahead and run this for the insurance. We already know that the insurance is $250 per month. So let's go ahead. Let's go back into the little chart that I have here. So if your closing was July 15 and you have 1, 2, 3, 4, 5, 6 months and a half that you're going to get a credit from the seller. Well, I'm sorry, that's for the property taxes only. So for the homeowner insurance is a little bit different, guys. The homeowner's insurance has to be paid upfront by the buyer. The buyer is going to pay the entire policy amount upfront. Plus, they're going to collect extra months to be prepared for next year. So it's a little bit different from the property taxes. So I'm going to run that with you right now. Let's get our calculator. So they're going to be paying $3,000 up front for the whole year policy. Okay. Their policy is going to be from July 15 to July 15, 2021. So that's the 1 year policy that they're going to be purchasing. But the lender is going to want to have at least extra money for next year. So you want to make sure to take that in consideration. So if they close on July 15 and they didn't have no mortgage payment on August, their first mortgage payment is September. Okay, so this is our first payment. So if you count it, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then a half. So in reality, when they pay their mortgage payment next year, after their closing on July 15, and their first mortgage payment is, remember guys, the first mortgage payment is going to be 30 to 45 days away from the day that they close. So they close July 15, their first payment is going to be here. So they didn't pay the month of August of homeowners insurance. So when you count the months, and this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then the policy is due on July 15, they in reality only have 10.5. So they're short. They're going to be short about 1 month and a half in insurance. So what you want to do is you want to go back to Xcellence title and you're going to enter in 2 months right here. And I'm sure probably the lender might want to collect 3, but in reality, the way that we ran the numbers is really short 1.5. So I'm just going to round it off to 2 months. But maybe the lender might collect 3. You always want to let the buyer know that this is a rough estimate. The lender is the one that's going to calculate the numbers at the end of the day. But this will give them a ballpark of exactly how much they're going to pay in closing costs and what their prepaids are. So now that we figure out the impounds, guys, because remember, everything else is pretty easy. The impounds is the only part that I wanted to break down for you so you can understand what to do in that section. Now we're going to jump into the lender fees. Now, if they're working with Xcellence Mortgage is going to give you a breakdown of all the fees, and then you can enter them all in here. If the buyer's working with a different lender, then of course you'll get the estimate that the lender gave them, and you can run the numbers here as well. But in this example, I'm just going to enter in. We're going to do the appraisal is going to be $500. The credit report will say about 120, just in case if the credit report has to be run a few times. Typically, credit report guys are like about $30 every time the lender runs it. So if you have husband and wife, that's $60. And at the very end, about when the deal is about to close, the lender is going to want to run their credit again to make sure that nothing has changed prior to the deal closing. So if it's husband and wife, you're looking at 30 each credit report, and it's going to be run twice. So we're looking about $120. That's why I came up with that figure. Okay. Now the tax service fee, every lender is different. The tax service fee, sometimes the lender that you choose has a tax fee service, and you can go ahead and enter that there if they do have it. Typically, it's about $120 depending on the lender. Now the flood certificate, every lender is different, but I'm going to put $8 here because that's what Xcellence Mortgage charges. And then here we have the processing fee. The processing fee, guys, that Xcellence Mortgage charges is $7.95. And then depending on the lender, every lender is different. So remember, we have many lenders that we work with. Depending on their underwriting fee, every underwriting fee is different. But in this example today, I'm going to be using $9.95. And then your prepaid interest, that's going to calculate for you automatically. And then if there's any additional fees that need to be charged, you need to add it here. Now, Excellence Mortgage only charges $7.95, guys. Some lenders charge a loan origination fee. We don't charge loan origination fee. So if you have a loan origination fee of 1%, you need to add it there because that's additional money the buyer has to pay on the day of closing. But of course, if you're working with Excellence Mortgage, you don't have to worry about the loan origination fee because we only charge a processing fee of $4.95. I'm sorry, $7.95. All right, so let's go ahead and continue here. Now here you can add other expenses or credit, guys. So if you know that your buyer needs to get a credit at closing from the seller, maybe they need to get $5,000 in order to close the transaction, you want to make sure you add your credits here. Now, if there's any additional expenses that need to be paid, you'll want to add them in this area as well. Now, as soon as you click calculate, we're going to go ahead and get the buyer estimate. And the closing cost is going to be, remember, an estimate. You want to make sure the buyer is aware it's an estimate. And it's going to be at $24,229. That includes the down payment of $15,000. You have your lender fees, your title and escrow. You have your recording fees, your it's called prepaids, but they call it impounds in this system. So these are your prepaids for your homeowner's insurance and your property taxes. And then other expenses and credits, it looks like the buyer's getting a credit for the property taxes and also for the homeowner association. So this amount is coming from the credits that you entered in there. So the monthly payment is going to be roughly about $2,086.78. You have your principal and interest. You got your property taxes, your homeowner's insurance, your HOA, and your PMI. Now, keep in mind, guys, the PMI is all dependent on the client's credit. If they have excellent credit, maybe their PMI might be lower. If they have, if they're at borderline credit, meaning, the amount, the credit that you need to have in order to qualify for a conventional loan, then at that point, your PMI might be high. So just make sure that your client is aware that what can fluctuate is PMI depending on their credit. HOA, obviously, if they purchase a home with higher HOA, that will fluctuate too. Homeowners insurance is going to fluctuate because until you don't get your 4-point inspection and your wind mitigation reports, you're not going to know exactly how much your homeowner's insurance policy is going to cost. So just let the buyer know that this is an estimate. And of course, the property taxes have to do with this specific property that we entered in here. But you always want to educate your client and let them know that next year when they purchase a property, the county is going to reassess the taxes. And when they do so, the taxes will go up. They will go up at the price that they're charging at that market time. Now, of course, your client can file for homestead exemption and get a discount, and the taxes will go a little bit slightly lower than the regular rate. But you always want to educate the client and let them know this because sometimes clients think that their property tax is going to be $333.33, and that's not the case. Next year when they buy, it might go up to $400 or $450. Depending on what the county reassesses the property. Now, every county, guys, has a tax estimator. So let's say, for example, if this property was in Miami-Dade County and I go to the property search and I come over here and I do a search on the property that we just did. All right, so let's go ahead and enter the address here. So once I enter in the property address, it's going to give me all the property details for this specific property. We'll just use this one for example. So it's going to give me all the information for this property, right? But it's also going to give me the property taxes that the owner is currently paying right now. But it's also going to give me a button here that I can do a tax estimator. And you always want to do an estimate for your client and just educate them and let them know, because if your client's on a budget and they need to be under a certain number, and then yes, when they buy the property, they're under that certain number, but guess what? Next year when the taxes get reassessed, next year they're going to be very surprised that the taxes went up. So you always want to make sure that you educate your client. So let's go ahead and add the purchase price that they're purchasing the property for. And then we're going to add the portfolio number. So you can just come over here, copy that, transfer it over to the system here. Or you can do it by city name, but I rather do it by portfolio number so you can give them an exact quote. And then here it says, are you transferring the homestead exemption? If they're not transferring and they're new buyers, you can do 2 estimates, guys. What I always like to do is I like to run 2 estimates. Will property have homestead exemption? For now, we're going to say no. And we're going to go ahead and calculate this. Now, once I calculate this, it's going to give me the tax estimate. And what I like to do, guys, is I always like to copy and paste it I copy and paste it and I give them a screenshot of this area right here, or I print it in a PDF, whatever you prefer. But at least it lets them know that when they purchase this property, their taxes are going to go up to this number right here. Actually, that's the taxes. And then you have your assessments here. So there's an assessment for the waste. And it looks like this area has an assessment for lighting district. So you always want to make sure you keep an eye on this, because if there's special assessments for the public body, you want to make sure that you disclose that. That way they're aware. On the contract, you do have the ability to tell the seller, hey, I want you to pay all special assessments for public body. There's a section of the contract that you can select, and then the seller will have to pay all this upfront, and then the buyer won't have to worry about it after. Or it can be pretty much the seller will pay to the day of closing, and the buyer will pay the remaining. So if you put it to the buyer, then the buyer is going to continue to pay this 46.52 until the lighting in that district is completed. So just keep all this in mind. And then, yeah, pretty much what I like to do is I'll do a screenshot of this, so that way they have a future idea of what their taxes are looking at. And then I go back and I do another screenshot of them having the property with homestead exemption. And then that way they can see the difference between both. Give me 1 second, guys. This website takes some time. Yeah, and you see the difference? It dropped a little bit there with the homestead exemption, because they're going to be getting $50,000 in homestead exemption when they apply for homestead. And that's pretty much it, guys. So let's go back into the Xcellence title. So we already finished the seller net sheet. We talked about the buyer estimate. And by the way, guys, if you want to save your estimate, you can click on save, and all of your save quotes will be here. Don't forget, guys, to brand your profile. If you don't have your picture here, if you don't have your phone number, when you click on print PDF and you try to download the PDF, it's going to be blank. So you want to make sure that you brand the you want to put your picture, your phone number, and your email. That way everything looks very nice. So when you download a copy for your client, this is what the buyer is going to receive. And it's going to be completely branded with your contact information, along with Xcellence Title's contact information. So just keep that in mind. And this is something that you can provide to the buyer, but you always want to let them know this is just an estimate. But of course, have their lender run the numbers. That way they can get more information straight from the lender, okay? All right, guys, so we're pretty much done with that one. Any questions on that, please feel free to open up the chat box. I'm not sure if you noticed, but on the top of Zoom, there's a black bar. If you click on more, click on the 3 dots, you have the option to open up the chat window, and you can ask questions if you like. And I will go over everyone's questions as soon as I see some questions pop up. All right, as of now, there's no questions, so I'll continue to move here. All right, guys, so we're going to do an estimate. We're actually going to work on a title quote. So let's go ahead and work on a title quote together. Let me close all these windows out, and let's jump into a title quote. A title quote is very easy. Actually, this is a lot easier than the last one I just showed you. Here, you're going to enter in the property address. You're going to put if it's going to be a purchase with financing, or if it's going to be cash or refinance. And then here, you're going to enter in the purchase price. And then you're going to enter in your loan amount. So you need to know what the loan amount is. So you can just grab a calculator real quick. $300,000. They're going to be financing with a 95% loan. So let's go ahead and add 285 there. And then we're going to go ahead and put that the seller will pay for the title insurance. And then the endorsement, guys, you don't have to worry about that. That calculates automatically. And as soon as you click submit, this is going to give you a title quote, and it's actually going to break down both sides. It's going to break down both sides. That way, at least if you're the day that you are working with a buyer and a seller at the same time, you're able to generate a quick little quote here, so that way you can see the different fees, okay? And keep in mind, guys, the closing fee for Xcellence Title is $695 in South Florida only. Anything over West Palm Beach is going to be $495, all the way from West Palm Beach to the end of Florida. Okay, so just keep that in mind. All right, and then the rest of the fees are going to be, your title insurance, your lender title insurance policy. You're going to have your lien search, your title search. These are good numbers to have in front of you guys, because this is good to have it when you're negotiating between the buyer and the seller on who's going to pay for the title policy, who's going to pay for the lien search and the title search and all of that. I want to show you guys a contract real quick. I know that Paul Sardone did a class a couple of weeks ago regarding how this part of the contract works, and I just want to recap on that. So let's say if you were using the as-is contract, guys, if you guys were using the as-is contract and you scroll down and it's time to select who's going to pay for the title insurance. If you select seller, it clearly states here, seller shall designate closing agent and pay for owner policy and charges, and buyer shall pay the premium of the buyer's lender policy and charges for the closing services related to the lender policy, endorsements, and loan closing, which amounts shall be paid by the buyer to closing agent or such other providers as buyer may select. So if you add a check mark right here, this one is going to make the seller pay for the title insurance. So let's go back to Xcellence Title. The title insurance that they're going to be paying is $350. Now the lender title policy, this is how much the buyer is going to pay for the lender title policy. And this is what the seller is going to pay for the title insurance policy. So just keep that in mind. Now, if you select buyer shall designate agent and pay for the owner title policy, if you select this one, then of course the buyer is going to pay these two amounts. They're going to pay these two amounts because, and as a matter of fact, let's go ahead and edit the quote and let's switch it over to buyer and let's calculate again. And as you can see, now these two are sitting on the buyer side. So if that's the case, you'll want to make sure you adjust your quotes accordingly to how you're going to be making that offer. So just keep that in mind. Now, if you continue to scroll down, this one right here, guys, the Miami-Dade provision, even though it says the word Miami-Dade and Broward, you really could use this throughout the state of Florida. Not a lot of agents are aware of that. It's just very common in Miami-Dade and Broward regional, but you can still use this if you're up north. And this one says seller shall furnish a copy of the prior owner policy of title insurance or other evidence of title and pay for a continuance update of such title evidence, which is acceptable to the buyer's title insurance underwriter. Okay, and then they're going to be paying also for the tax search, and they're going to pay for the municipality lien search. So just keep that in mind. Now it says here, buyer shall obtain and pay for the post-closing continuing and premium for buyer's owner policy, and if applicable. So if the seller doesn't have the prior owner's title policy, then of course the buyer, will have to pay for the continuance premium for the buyer's owner policy, and if applicable. And the buyer has to pay for the lender policy. Now it says here, seller shall not be obligated to pay more than this amount if left blank is $200. So let's go back to the title quote. So the title quote says here the title search is $150. So that's fine. You're okay because it's under $200. So you can leave it blank. So if you leave it blank, it's going to be $200 for the abstract continuance of title search ordered by the performing closing agent. So just keep that in mind, guys. You can still use this clause right here up north. No, don't worry about the Miami-Dade Broward. You can still use it. It will still apply. The seller will pay partial of the lien search, the title search, the municipality search, and they'll pay for the continuance owner policy. So that means they'll be paying this fee, this one, and the $350 one. And the buyer will still have to pay the $1,500 because that's a cost that's always sent to the buyer unless you negotiate that on your contract. If you ask for seller contribution and you ask for $5,000, then of course, the $5,000 is going to apply to all their closing costs. So just keep that in mind, guys. All right, so let's go back to the estimate. We already wrapped up our title quote. Now we also have to talk about monthly affordability. So let's jump into that one. So we have monthly affordability. So let's say, for example, the buyer's monthly payment goal is about $2,000, okay? And the property that he's looking at, we're going to enter in the property address. And then they're going to be doing a conventional loan with 5% down payment, 3% interest rate, and the closing estimate date is that time, and they're going to do a 30-year loan. Now, if you continue to scroll down here, you have who pays for title insurance. In this example, I'm just going to put the buyer because I want to make sure that the buyer is aware of that cost. I don't want to put the seller in this example because I want to make sure the buyer is aware of that cost, even though you're going to negotiate that on the buyer's behalf on the contract, but you still want it to be displayed on their paperwork, okay? Now over here you have endorsements. That's already selected. You don't have to worry about that. Homeowners insurance, we'll say it's about $3,000. And property taxes, we'll say it's about $4,000. And then homeowners association, $100. And then you have your Impounds. We're back to the impounds, guys. So I'm hoping you understood everything that I explained to you earlier, because it's very important to be able to give a proper estimate. Now, if anybody has questions on everything that I explained with regards to impounds, which in reality is really called prepaids, if anybody has any questions about that, please, type it into the chat box. I'll be more than happy to go over everybody's questions. I'm going to bring back the chart. That way you can look at it one more time in this section, but just understand that if you use this little chart right here, and if you want, guys, do a screenshot, because it's a very good chart to have, because it makes it very easy. Like I said, if the closing date is July 15 and the buyer's first payment September 1st, you pretty much start counting from the day that he starts paying. So this will be his first payment, second, third, and so on. Since this is his first payment, he's very close to tax season, so he has to pay his taxes November 1st. So just keep that in mind. His homeowner's insurance effective date is going to be July 15th, so he has to pay a whole 1 year policy up front, and then he has to give a proration amount for the months that he's missing. So if he closes July 15, he's going to be missing July 16 all the way to the 31st. He's going to be missing his August payment because his first payment's on September 1st. So those are pretty much a month and a half there that you have to take account for. So if you have any questions about that, feel free to let me know. If not, we're going to be going on to the next section. So in this example, we had calculated 2 months on the homeowner's insurance, and we had calculated 4 months on the county taxes. Now the lender fees, you can enter the lender fees here as well. I'm going to go ahead and enter it real quick, which was the appraisal at 500, credit report 120, tax service 120, 8 on the flood. And we're going to go ahead and put the processing fee that Xcellence mortgage charges of $795. And then the underwriting fee, keep in mind, guys, every lender is different. Underwriters have their own fees depending on which bank you're going with. In this example, I'm going to put $995, but you always want to make sure you run those numbers with the loan officer that you're working with, okay? And then let's go ahead and calculate this, and let's check out our monthly affordability. And it looks like the buyer can qualify up to a purchase price of $307 if he wants to stay at a monthly payment of $2,000. Keep in mind, this has nothing to do with him qualifying debt to income ratio. This is only based off what he told you. If he told you he wanted a $2,000 payment and he's trying to stay within that budget, then you have to stay under a purchase price of $307, because that's his monthly payment right there. So it's taking into account the principal and interest. It's taking into account the property taxes, homeowners insurance, the HOA, and keep in mind the PMI in this section, for some weird reason, this is calculating it very, very low. I already brought this to the attention of the person that designed this software, which is a third-party company, and they're in the process of making a new feature. As soon as they release that new feature, you'll be able to control the PMI and you can enter in the amounts there. Now, with regards to PMI, guys, PMI is determined on the client's credit. If they have very good credit, they'll qualify for a low PMI. But if they have very bad credit, they might get a higher PMI. So you always want to make sure you get your estimates from your lender. Okay? And then let the buyer know that this is just a rough estimate, but this is all determined based off their credit. And this will give them a nice breakdown, of course, their down payment, the estimate lender fees, the title cost, and the recording and transfer fees, the property tax prorations and HOA prorations. And this will also include the prepaids as well. So this will give them a nice breakdown of, if they want to stay under $2,000, what purchase price they should be looking at. Because sometimes you might have a buyer that'll be sending you houses at $350, $400, because they're beautiful homes. They look very beautiful. They're probably all remodeled, but you want to make sure that the buyer is realistic, because if they're trying to stay under $2,000, even though they qualify for $2,500, they have a budget in mind and they're telling you on your initial conversation that they want to stay under $2,000, then you let them know, hey, if you stay under $2,000, this is the price range you need to be at. And then just make sure that they're aware of that. And this, keep in mind, guys, this estimate will change depending on the property taxes and depending on the HOA and the PMI. All right, guys, so it looks like we have a question from an anonymous person. Is the homeowner insurance required with cash transactions? That's a good question, and I'm glad you asked it, because a lot of old school people, they have this mentality that if I buy cash, I don't have to get homeowners insurance. It's always recommended that a person insure their assets. Why? Because if you have a property and you buy it cash and you don't have homeowners insurance, and God forbid, knock on wood, a hurricane comes and blows the house off the map, now you're left with land. You're left with the land, and the land value is going to be different from the home value. So always try to educate your clients and let them know, hey, I understand you're buying your cash, but I would recommend to at least get a insurance policy so that way your assets are protected. It doesn't have to be a full coverage, and you don't have to get $50,000 personal property or other structures, but at least try to insure the dwelling. The dwelling is the most important. And the other most important thing is liability, guys. Someone comes to your property, falls, and breaks a leg, and it might be your best friend. Guess what? They hire an attorney, and the attorney's going to say, hey, you can sue them. They just bought that property a year ago in cash, and they have no loan. That means they have $300,000 sitting pretty much there that you can attack the asset because you broke your leg on their property. So just keep that in mind, guys. You want to educate these people. Some people have cash in the bank and they're able to buy. They're very, they have the money in the bank. They're able to buy, but maybe they don't have that common sense of insuring their assets and making sure they have liability protection. So you, as the agent, you want to make sure that you educate the public. That's what we're here for. We're not insurance agents. We're not lenders. We're not home inspectors, but we do have the knowledge and we are trained to have this information. So even though you don't specialize in those different careers, you want to make sure you point the parties to the right direction. So that way you can say, hey, listen, they have tax question, refer them to a tax person. They have lender questions, refer them to the lender. They have home inspection questions, refer them to the inspector. But you're there to point them to the right direction because they're looking to you for guidance at the end of the day. All right, sounds great. That's a great question. Thank you so much for asking that one. I If there's any additional questions, feel free to let me know. I'll be more than happy to go over everyone's questions. For now, I'll let you guys type away. If not, I'm going to continue to the next section. So let's jump into rent versus buy, guys. Now, this is a very good question because right now, rent, unfortunately, a lot of areas, I'm not sure up north, but I can tell you down south, rental prices are ridiculous. You can rent a house that at one point was $1,500 a month. Now the next thing you know is renting at $2,500 a month. And if you have your customer that came to you, maybe they're looking to rent and you're trying to educate them and you want them to know, hey, look, you're paying $2,500 a month for this rental property. Maybe if you purchase it, you'll be able to save money in the long run. So let's go ahead and run these numbers. So let's say their current rent is $2,500, okay? And they're renting the property located at this address. Well, actually, the address that you're going to put here, guys, is the potential property that they want to purchase. Okay, let's go ahead and put that. So this is the potential property they want to purchase, and this is what they're currently renting right now. And the property they want to buy is $300,000. They're going to be doing a conventional loan with 5%. Loan amount is $285, and interest rates are low. They're very low. It could be 2.75, it can be 3%. It just depends on the person's credit. In this example, I'm going to put 3%, guys. But you want to make sure you obviously talk to Xcellence Mortgage. Make sure you get your buyer pre-qualified, and that way you can get the exact numbers so you can better educate the client. But since we're just doing a rent versus buy, this gives them more or less like an idea of what they can do with their money, okay? Now, rent appreciation, guys, every market is different, but I'm going to put 3% here. Rental insurance, it's asking for a percentage, but rental insurance is probably like maybe $500, maybe $700 a year. It's asking for a percentage here. I'm going to leave this one blank because I wish it would have asked for a dollar amount, but this one's asking for a percentage and I don't have the percentage right now. Here it says annual price appreciation. So, let's say, for example, we'll put 3% every year, cost of living goes up 3%. Then we're going to go and put here buyer's income tax rate. So obviously you're going to have to ask them what their rate is. Is it 12%? Is it 22%? Or 25%? Maybe the tax rates are going to be changing now with Biden here in the office now. So I know that there were 22% under Donald Trump's administration. So I'm going to put 22% there. But maybe later on that will change to 25. I'm not too sure. You'll have to ask the buyer what their tax rate is, and you can probably get that from their tax return, okay? Now here, you come over here, you're going to put your estimate closing date. You're going to pay, who's going to pay for title insurance. I'm going to put the buyer, so at least the buyer has an estimate of what that cost. Endorsements, that's already selected. No worries about that. Same information, guys. We're going to put $3,000 insurance. Property taxes $4,000. And then this property has an HOA of $100. And the same thing with the impounds. We're back to the impound. So you need to make sure you understand how to calculate this. I did record the session, guys. I'll send the recording to everyone at the end. But yeah, you'll be able to enter in the amounts here. So let's go ahead and put 4 months and for taxes and 2 months for the insurance. Now let's come over here and we're going to add the lender fees. So you can get this from your loan officer, but I'm going to enter in the same amounts I've been using the entire presentation. $795, underwriting $995. All right, so let's go ahead and calculate this. Now, once we calculate it, you see the difference, guys? This is the rent. This is what he's paying at in rent in red. You see how high it went compared to if he purchased? And this is something that you can show the buyer. That way they can see the difference. So the total buy cost after 3 years. So this is based off just 3 years. And they don't allow you to change the number. But this is based off 3 years. So if they were renting, this is how much it will cost them to rent, and this is how much it will cost them to buy. So, and then here it gives the total month cost. It breaks down all of the details. It also gives the due at closing. These are the fees that they have to pay. But here it will give them the tax savings. It will give them the appreciation, the homeowner's insurance. It will give them the taxes. And of course, it's calculating the property taxes for 36 months. And it's calculating principal and interest for 36 months. I mean, if you wanted to run this manually, if you wanted to run it manually, and instead of doing a 3-year comparison, if you wanted to do a 5-year comparison, as you can see, it took the taxes, the taxes were $4,000 a year times 3. That's what it's doing there. But if you want to do it times 5, you just times it by 5, and then that will be $20,000 here. And then the same thing with the insurance. If the insurance is $3,600, you just times it by 5, and that's $18,000. So you can just change these numbers, and then you can obviously get their rental that they're paying and calculate it. So if it's $2,500 they're paying times 12, that's $30,000 a year times 5. It will be $150,000. So this number will change to $150,000 for 5 years, and then you'll have to run the numbers on the buy side so you can compare it. But this is a really good estimate that you can provide to your rental client. And you never know, maybe they see it and they'll be like, oh, wow, look how much money I save purchasing a property. And you never know, they might change from renting a home to purchasing a property with you. So just keep that in mind. I know that down south, rental commission is like 50%. So you typically get a half month's rent, but I know up north, rental is a whole different ball game. They only give a referral fee for $100, $150, $250. Every referral fee is different up there up north. So a lot of agents don't show properties for rent up north because the commission is very little. But if you did have a rental client that you were talking to, and you never know, maybe if you educate them and let them know the difference between rent and buy, you never know, you might be able to turn them into a client that purchases a property, and you can make a really nice commission there. All right, guys, so that's pretty much how that works. So we went over a lot of information today. We did a seller net sheet, we did a buyer estimate, we did a title quote, we did the monthly affordability, rent versus buy. Lots of features here, guys. I hope that you enjoyed all the information that I had to share with you today. Is there any other questions that you want to go over at the end of the session? And now is the time to do it. Feel free to let me know, and I'll be happy to go over everyone's questions. Now, I do want to let everyone know on our Xcellence title page, if you come back to Xcellence title, on the home page, you're going to notice here that we have a little button that says submit a title order. We make it very easy to submit the order, guys. All you got to do is say that you're the realtor. You come over here, you enter in all your information, enter the property information. You can add the customers. And as soon as you hit submit, we're going to go ahead and create a file and start processing the request for you. Now, keep in mind, guys, Xcellence Title can close a transaction anywhere in the state of Florida. We can close out of the state and even out of the country, depending on the country, of course. We will send the remote closer to your client's home or their business location, making it very easy for them to sign the closing documents. No need to come to the corporate office in Miami, Florida. Now, by the way, Xcellence Title waives the cost of the remote closer. Typically, a title company will charge you about $150 to get a notary out there to make you sign the documents at your convenience. Xcellence Title will waive the cost of the remote closer because you are an agent of Xcellence Realty, and we give that service to you and your customer. So just keep that in mind. Now, another thing I do want to mention to you guys, contacts and requests. We do have a page here called contacts and requests. If you're going to be using the services of Xcellence Title, just come over here, add the phone number, add the email address on the contract, and the corporate office address, which is located right here, or we have it right here as well. You can just copy and paste it and put it on the contract, okay? Now, if you continue to scroll down, we have our escrow deposit button. You can find it right here on our contact page, and you can also find it right here, which I'll talk to you about that in just a bit. But if you continue to scroll down, guys, we do have our agent support contact info. If you want to get a phone status update, you can feel free to click here and dial this number. If you want to get a report via email to see what's going on with the title search, the lien search, feel free to click here, fill out the information. We'll send you a report via email. And if you need an escrow letter, once your client does the escrow deposit, if you need an escrow letter because you got to give it to the other agent within the 10-day time frame, you want to make sure, of course, that you click right here and request an escrow letter. Just fill out the information. We'll shoot you out an email with the escrow letter. Okay. Another thing too, another really cool feature that saves you time because you don't have to be calling the title company asking for a refund of the escrow deposit. If your deal gets canceled, we make it very easy for you guys. Just come over here, click right there, fill out the information, upload the release of cancellation, and as soon as you submit it, we'll refund the client the escrow deposit. So pretty much everything can be completed here on the excellencetitle.com website. And don't forget the login button is here to log back into the system, okay? Now, another thing I do want to talk to you about is the escrow deposit, guys. If you click right here where it says escrow deposit, this link right here, you can copy and paste it and share it with your client. You can send it to them via email. We make it very easy for you to collect deposits. No more running around, picking up a check, dropping it off at the title company, or having your customer go to the bank and do a $20 wire transfer. All of that gets eliminated. Just share the link right here. Your client's going to come in. They're going to acknowledge that they're doing a purchase. They're going to click yes. They're going to fill out all their information. In the bottom, they're going to add your agent name. They're going to hit the button submit. And as soon as they do that, the next page, we're going to ask them for their bank account information so they can make the payment online. So we make it very easy to collect the escrows, to release escrows, to order escrow letters. Pretty much everything can be handled right here on excellencetitle.com's website. All right, guys, so it looks like no more questions came in. I do really appreciate the time that you guys have taken today to learn more about the system. And if you have any questions, don't forget our new Xcellence Hub system. If you don't have access to it, please book your new tool setup appointments. We can help you set up your new tools. We're going to be getting rid of Workplace and Work Chat, guys. Workplace and Work Chat will no longer exist after February the 10th. Just to let you know, if you scroll down under all Xcellence agents, if you scroll down, well, give me just 1 second so I could track it down, guys. If you continue to scroll down, Melinda Morano posted the other day on January the 20th, the link to book your new tool setup appointment. Click right there, book an appointment on the time and day that you're available. And then once you book the appointment, we're going to help you set up the Xcellence Hub. We're going to help you download the Xcellence Hub mobile app. We're going to get you set up with the Xcellence Marketing mobile app that we just made as well. That's a new app that we're providing as well. And then we're going to help you set up your Xcellence title system, the system that we just went over. If you haven't created your new account, we're going to help you do it on this day as well, okay? Now let's go back over here. So Workplace, keep in mind, guys, this is going to be gone. You can't message us anymore in this software. You have to have your Xcellence Hub. Once you have your Xcellence Hub, inside of Xcellence Hub, you have right here the XR support options. If you come over here, you can easily communicate with us. We have a chat button right here. You can click right there. It opens up a little pop-up window. You can choose the department you want to talk to, and then you can start chatting away with us. This is our phone number. Lock this number on your phone because this is our new phone number for agent support. And that number will route you to the 4 different departments that we offer. We got tech support, where we can help you with software questions that we provide. Broker support, we can help you with contract related questions. Any questions that you have, feel free to call us. You can email us all your contract questions, and we'll be more than happy to help you. Agent support, guys, is more for subscription, updating your website. And accounting support, guys, of course, has to do with money. So anything that has to do with commission, feel free to reach out to accounting support. Now, if you have any questions that has to do with how to enter items in your realty back office system under your transaction file and you're managing the financials and you're not too sure how to add a charge item or payout item, so if you're in this section right here and you don't know how to add a charge item or payout item, feel free to reach out to tech support. Tech support will handle that with you, okay? Now let's go back over here real quick. I want to show you one more item. So all of this information, oh, and by the way, I forgot to show you Zoom support. We do offer Zoom support now. If you have any questions and you want to get together with the broker support department, click right there. That will take you to the landing page where you can select the type of appointment that you need. We can meet online in a Zoom meeting and we can go over your contract questions, okay? And we also have the same appointment calendar for tech support as well. Any questions you have regarding the software that we provide and you want to do a quick screen share with one of our representatives, feel free to book an appointment and we can help you with that as well. Now, all of this I just showed you guys, some of you might not have Xcellence Hub right now at the present time and you need to schedule your appointment. But if you come to Realty Back Office and you click on training and support, we have our support options right here. Click right there, Xcellence Realty Support Options, and you'll be able to come to our landing page. This is the number for the clients, guys. Don't call that number. This is our new support number right here that you can reach, which will route you to the 4 departments. Here's our calendar links, and here's the chat button. If you want to have a quick question, get answered quickly, feel free to send us a chat message there as well. Now back into Realty Back Office, there is something I do want to show you guys. We've been putting all of our videos. If you didn't attend one of our webinars and you wanted to recap on the information that we provided, feel free to come over here. You have your on-demand agent training button, which will take you to our library where we have all of our past videos. Anything that has to do with Xcellence Mortgage Mondays, if it's Title Tuesday. And by the way, guys, I don't know if you noticed, but Title Tuesday, we have Paul Sardone, the attorney at Xcellence Title, that does very, very good classes here. And he provides a lot of information on different items. It can be either open permit, it can be, real estate fraud. It can be lots of potential information that you definitely want to know, especially coming from an attorney. So make sure you watch these videos because these are very good videos that we put together with a lot of information so you guys can learn. Now over here, we do have our past training, realtor training classes. We have our realty back office videos. We have our contract training videos. So if you're a new agent and you want to learn a little bit about the as-is contract, the listing contract, feel free to watch the past videos, or you can always join our new classes that we're going to be conducting. If you come into our new Xcellence Hub system and you come over here to events, you're going to be able to attend our live classes. You can click attend and then you can click on the link to register, or you can click on the link to join the class. All right, guys, so we're pretty much done with all that information. I hope you enjoyed today's session. Any questions you have, feel free to give us a call and we'll be more than happy to help. All right, thank you, and I hope you have a wonderful day.